Welcome back to our latest episode of Connecting the Dollars. I'm Amanda Vaught here with our resident CPA, Emily Agosto, and we are talking deductions, tax deductions under the new tax law that passed early this year, the One Big Beautiful Bill Act. OB3 is what we're calling it. And so one of the new provisions they passed was an increase to the SALT cap deduction. By SALT, we mean the state and local tax deduction. You want to tell us more about that, Emily?
Yeah, so the SALT tax really only comes into play for individuals who itemize their deductions. So that just means their individual deductions are higher than the standard deduction, which for 2025, let me tell you, single filers, it's $15,750. Married filing jointly, it's $31,500, and head of household filers, $23,625. So if your itemized deductions are higher than those numbers, then this will apply to you. It will especially apply to people who live in states with high state tax, high local taxes. We're both in those kinds of cities. I'm in Chicago, Amanda's in Brooklyn, so probably people around us may be affected. Prior to OB3, the limit was $10,000 and it had no phase out or income limit. Now for tax year 2025, so when we are doing the taxes in early 26, the cap is at 40,000. That's a pretty large increase for those who maybe weren't able to deduct all of their state and local income taxes and property tax for the prior years. But there is a phase out, and it begins with a MAGI of 500,000, I believe.
Yeah.
We'll link all this below. And then if you're filing separately, the amount you can take is 20,000. Usually it's half for married filing separate individuals. But also keep in mind this is temporary from 2026 to 2029. It may be updated or change again after that year, but like many things, we can't get used to them.
The phase out is between 500 and 600,000 for married filing jointly, and once you have more than $600,000 of income, you fall back to that $10,000 maximum state and local income tax deduction. You don't just get zero. It falls back to 10, which was the prior law.
Exactly. Thanks for clarifying that. Yes.
So the people who make between $500 and $600,000 are the ones who are really going to be impacted by this because that is such a big jump. So just something to keep in mind if that's you.
Yep. And if it's still 2025 when you watch this, you can maybe do a little planning to see if that's going to be you. And perhaps it'll change you from owing the IRS to getting a refund back. So this one could significantly impact your tax return.
Yeah. I feel like there's a perception out there that the tax code benefits rich people. And for a lot of people, they think making $500,000, $600,000 makes you rich. And it does, right? But there's like a mismatch there because the people who really benefit from the code are not those people. It's like the ultra wealthy. I have worked with people who have made this level of income and they're like, when do these tax deductions kick in that are supposed to be great for rich people? And I'm like, you're not even close. In fact, you're more penalized than anything usually.
Yeah. There's so many different qualifications for everything. So even if something's called no tax on whatever or increase this tax deduction that you usually take, there's so many other rules that come into play. And it's difficult to find those rules sometimes to interpret these laws. And maybe there is no clarification yet. So definitely keep an eye out and trust your tax preparer this year because they're going to be doing their best to keep up with all of these changes.
Yeah. And Emily and I are recording a series on tax law changes from the OB3 Act. So look for our other videos on that, which we'll link here.
Yep. Thanks.
Bye.